So in our title searches, in our credit reports, in our TLO, in our comps, we do a full evaluation of that note before we ever think about buying it.
Nice. Okay. Why would somebody want to buy seconds over firsts? Why do you guys buy seconds over first? What's your what's your return? Do you feel like you get a better return?
So I'll use a baseball reference that I just learned in the last year.
Okay.
Seconds get you more times at the plate. You have 100,000, you can buy one, possibly 2 seconds. Firsts. You have 100,000, you can buy 6, 8, 10-second position notes. Do you want 1 or 2 times at the plate, or do you want 6, 8, or 10 times at the plate? And the returns, because you're buying them at lower price points and they're lower UPBs, all of which equates to way lower amounts of money, of your money spent, the yields are astronomical. You can maybe double on a first. You can maybe double and a half on a first. You could go 10 times on a second. So, do you want 1.5 times of this, or do you want 10 times of this? I want 10 times of this. It's much more money.
Well, what do you
And I'll just send you a link. It's called Soulmates. And
if you take, you've got all these loans. What do you keep for yourself? What determines whether you're going to keep them or you're going to sell them off to another person? Are you looking at the loans off your what's called a list or a tape? So you're looking at these loans, and right away you're going, I want these loans right here. But you buy these loans, or you have to buy a pool. They make you buy this many for this much.
Most
buy the pool or not, you know.
Well,
And
that's
then
not true.
You guys just
Some allow cherry picking.
I'm sorry.
Some allow cherry picking.
Okay. And then you go ahead and you take these loans and you buy these loans. What determines whether or not you're going to keep the loan? Or do you determine that up front?
Everyone has a business model, so you determine your business model up front. Ours is equity to cover the first mortgage and to cover our expense and purchase price of the second. Okay, and that's to help us with the bankruptcy that we talked about earlier, to make sure we have equity. And of course that the first is current; they're paying their first. So that goes through, and then of course we have other criteria that I mentioned in the macro. A certain state, certain county locations, maybe we don't want. Maybe nothing under 10,000. Maybe we don't want to look at because it'll take too much work. It's not economical for us to do. So there's other criteria in there that we eliminate. Okay. And then that spits out what we call the cherries. And those are the ones that we do the deep due diligence on.
What happens to the other ones that you have to buy that you don't want?
Right. If they don't meet our model, then we're going to disperse those out for sale to our downline.
How many times have you changed your model?
Never.
Since you started out from... So
Never.
Basically you started out green as green could be, bought a couple, started going, thought, you know what, we've got a good model. And what you had started out with to begin with, you stayed with, and it's been good for you.
Right.
We've
and
never
again,
changed.
we were conservative. We didn't want to lose everything and then not be able to continue because we started small.
Sure.
So yes, that's basically worked for us. Now, some of the other ones that don't meet our model, we'll take a second look at them after we purchase them, and maybe some of those, we could make
It's
a deal
like
on.
after all.
Exactly.
I think we make a brief attempt at contact, and if we can't get them in like 30 days, we'll sell them. But some of those can also be miraculous. Oh my goodness, this is amazing! I'm so glad. But, so you never know. So we would make like some initial attempts to get them. If we don't get them, we'll sell them because they're not in our model anyway.
Do you use a third-party contact person, or do you guys do all your own contact?
We do everything.
You do everything in-house?
Yes,
She's
we
the
do.
workout queen of all time.
Aw.
She is. She's amazing.
That's because I have great backup in administration.
She says that, but it's not true.
All right, well, there's 2 more of you. Who's the other people involved with your company?
Well, we have Al Sansoni. He is an actuary, and he handles all of
What's
our
an actuary?
Mathematician.
brilliant mathematician.
Okay.
And he handles all of our assets and then also does all of the acquisitions for us. He makes the contacts with the banks and the hedge funds, and then that's who we communicate with to purchase the pools.
Okay. Who's the other one?
And we have Dennis Dekoff. He's a serial entrepreneur who's ridiculously successful at 32 years old, and he does all of our marketing, as you can see, our booth and all of these fantastic things. And he's also in charge of our investor relations. He's a great guy.
Is that right? All
Yeah.
right.
Yeah.
Okay. Well, turn to the camera. Give some people your contact information. A little bit more about your contact information. So tell them and go ahead.
My name again is Kathy Cray. That's CCRAY at PACDesk, PACDESK.com. And please check out our website, paperassetscapital.com.
I'm Kathy Jeffs. Same extension of the email, but I am CJEFFS. We have a meetup on meetup.com, Women in Notes. Join us. We do a monthly webinar, and I think we're okay at it.
Wow. So you guys are doing the webinar, so people can keep in contact and check you out.
Absolutely.
Free education.
Totally
Completely free.
Wonderful. All right. Well, thank you very, very much. I appreciate